About 3 years ago, I was talking to a friend of mine, and he shared with me, he's like, "Hey, yeah, Tim, I don't do fix and flip anymore. These days, each deal that I do adds at least $1 million to my net worth." And when I heard that, I was like my ear perked up, right?
Mhm.
It's like, well, tell me more. So he told me how he invests in multifamily, he does commercial real estate, and at that time, so that was my first light bulb moment. And then at that time, his daughter was turning 16. My son just turned 16. And I thought of the idea of, hey, why don't we create a program for young people, teenagers, and teach them real estate investing and have them bypass the whole single family home stuff and go straight into multifamily syndications, commercial real estate. And that's how the Teen Millionaire Challenge was born. And so through that program, I was a student myself. I
Uh-huh.
created it for young people. I was just as much of a student as they were. And through that program, I get to witness how these young kids, like these young kids, they underwritten and made offers on, like, meaning actual LOIs on over $1 billion worth of real estate during
Oh
that
my
1 year long.
gosh. It's
Yes.
huge.
And so that was the second light bulb moment for me. Here I am for 20 years. I have this limiting belief that multifamily commercial real estate was for, you know, like rich people.
Mhm.
It was for, people that have a lot more money, a lot more connections, is way more complicated. And like all these things that all of these excuses that I created for myself of why I can't do it. And throughout the years, I have had, several friends that have gotten over to multifamily and did well with it, but it just didn't connect for me. So through this Teen Millionaire Challenge program, and I get to watch these kids do it, that was the second light bulb moment that came on. And, I told myself, like, if these kids can do it, I can do it. And yes, so I officially went all in April of 2022. So now
Okay.
it's 2 years in the business, and I've learned so much, and I've done lots of deals, both as co-GPs as well as a fund manager. And now I've cracked the code pretty much. I've cracked the
All
code
right. So
on
you've
how
cracked the code.
anyone.
What is this code that you've cracked about raising capital? I mean, I'd love to hear it. All of these people on this call and listening later, which I'm so glad that you're listening, they are raising capital as well. And this code that you're talking about, tell us a little bit more.
Yeah. So, there's different levels of this code, but I'll share, the first thing is just know that you can do it. Like that's like the first one. The giving yourself that permission, even if you don't fully believe that you can do it, just give yourself that permission that, hey, if Tim can do it, Maria can do it, if these kids that Tim's talking about can do it, like I can do it. Like giving yourself that permission is, first of all, the most important part, because without that, you're not going to do a thing. Like everything
Right.
else becomes a block. Um, and so that's number one. Number two, the code that I cracked, and you said it, is that the capital raising part of the business. So there's, several different parts of the business. You have acquisition, you have, the asset management, like acquisition person rate, who's going to find the deals, do all
Right.
the due diligence, put up earnest money, all of that stuff. You have the person who does all of the managing of the property, and then you have the person who does the capital raising to be able to acquire these properties. So out of all of those different roles, after looking at all of them, I realized that capital raising is the area of the business that plays the best to my strength.
Mhm.
And so I started there, but as I started there, I realized, oh my gosh, everyone coming into the business, this is where they should begin, because it's the area of the business that has the most amount of leverage, in all different aspects of the word leverage. Number one, you're able to, like using OPM, right? Other people's money to get into deals. So that's one level of leverage. Number two, you can partner with a proven operator that has all the track record that you need to gain the confidence of your investors to invest in the deal. So even though you might not have any experience at all, you might not have any track record at all, but the fact that you say, hey, I partner with Massive Capital, they have, hundreds of millions of dollars asset under management, that carries a lot of weight. And so your investors are investing in the deal, even though it's through you, because whether you're using the co-GP model or you're using the fund model like I do, even though they're investing through you, but they know that ultimately their money is with the operator who's proven, who have the experience. And so that's the second level of leverage. And here's my third favorite level of leverage. You see, in the different aspect of the business, if you're the person who does acquisition, when you find a deal, the chance of you doing business with that seller again is pretty slim. It might happen, a seller might have, 10 assets, you buy 10 of them from them. That might happen, but it's rare. It's very rare that you do business with the seller again. The same thing on the buyer side. If you ever sell, it's very rare that you do business with that buyer again. The investors on the other hand, the passive investors on the other hand, once you establish that relationship with you, number one, there's a really high chance that they'll reinvest with you multiple times. And number two, there's a high chance that they'll refer their friends and family to invest with you multiple times. There's no other parts in this business that has the most amount of leverage as the capital raising part of the business. So I absolutely love it. I'm shouting from the top, to make sure that everyone gets into the business and get into the business, especially from the capital raising side. There's so much you can learn coming in from this side. There's just, I think it's like for me in my next level of growth, like I foresee just scaling up the capital raising model where I would never have to be an operator.
Right? I mean, that's the dream. And to have those people who are coming back and investing with you multiple times, that is the key. But how did you get there? Like, how do you get to that point where you're keeping those connections with your investors, cultivating them, keeping them, and then having them reinvest? How do you cultivate that relationship with them?
That's a great question, Maria. Yeah. So you got to come into the relationship, thinking this is a long-term relationship. At a minimum, it's a 5-year relationship. At a minimum. Okay. But really, you should be thinking lifetime relationship or even lifetimes, because their kids might invest with you and their grandkids might invest with you. So, so think like very long term. And when you think long term like that, your actions are very different. This is not, investing in a deal with you is not like a widget that you sell. You might sell them a phone and you never sell them another phone again. No, this is a very long-term relationship. And so from there, you treat everything like an actual relationship that you are genuinely building, for your future, for your next generation, even. And so start there, and then from there, whether they invest with you or not on that first deal that you're promoting to them, it's irrelevant. If they invest with you on that first deal, like, thank God, that's
Yeah,
huge
right.
blessing, right?
Thank God.
But that's a bonus. That's really a bonus. However, even if they don't invest with you the first deal, the second deal, the third deal, they might invest with you the fifth deal, the 10th deal. You never know. You never know. And so always be out there, make it all about the relationship and understanding, because it is a relationship and you are now playing a role of, even though you're not a licensed like investment advisor, you are kind of playing that role. You're playing a role of someone who is going to be on their side to help them vet, the right deal, the right operator, the right investment opportunities, to refer to them. So that way they can, they know about the opportunity, let them know about the opportunity, and they can invest in that opportunity and grow alongside with you. And so yeah, so it's very important. Like once you establish the relationship, get to know them, get to know what their goals are, especially around their investments, what their goals are, what type of like risk level that they like to be. Because I have people that they're not interested in investing in equity position at all because they don't like they don't like the risk factor. They prefer to invest into like a debt-based investments where they could be a private lender, or they can be part of the like a debt fund type of
Mhm.
structure. So every investor is different, and so get to learn them, and getting to learn who they are, and then yeah, like let everyone you in your life know every single day. Let them know what you do. Don't keep it a secret.
All right, so that's secret, because that was my problem when I first got started. I kept it as a secret just for me. But how have you utilized social media to share this secret with everyone? Because I mean, we
Yeah.
love real estate. You and I could talk about real estate for the rest of the day, but how do you get that to other people?
Right. No, great question. So there's different ways to do it. I'll share with you how I did it.
There you go.
And yeah, so I wanted to learn coming into this business. I wanted to learn as much as I can, as fast as I can. And so I thought of, well, if I want to learn, why not create a community and bring others alongside with me? So the first thing I did was, I mentioned to you, I started in April of 2022. May 1st, 2022, I started my Facebook group, started
Mhm.
invite all of my friends and family to there, because then now whoever joins the group, it tells me that they're interested in this topic. That's a tip for you, by the way. And you can start a Facebook group in less than 5 minutes. So,
No
so
excuses is what you're
yeah, no
saying.
excuse,
No
right?
excuse.
Facebook has made it very, very easy. So yeah, so invite your friends and family to your Facebook. If they don't join, no big deal. At least now they know what you do. And if they join, great. Now they have great interest in the topic. And then the second thing I did after that was started a weekly, virtual meetup podcast where I interview a subject matter expert. And so now I have someone else with the topic that that I can educate my communities on, so I don't have to be the expert. Like I don't have to know a thing about capital raising or about multifamily. I don't have to know anything like that. I just got to be willing to be the facilitator and bring someone on, and interview them, kind of like what we're doing here. Interview them, and they'll provide the content. And it's like you didn't even have to pay them for it. A lot of people ask me, Tim, do you ever pay any of your speakers? I said, nope. I just give them
Yeah,
a
I was gonna
community.
say,
Yeah,
I didn't pay you to be here. You just showed up. So
exactly.
thank you.
Yes. And of course you have to do your part to provide the community for them to be able to get exposure to, because that's the exchange. Okay. They're not doing it for free. I'm not here doing this for free. I'm doing this because I want to tap into Maria's community, the massive capital community. And so yeah, that's a value exchange. But yeah, so let everyone know what you do, and learn and bring your friends and family along to learn alongside with you.
I think you went back to leverage, which is exactly what you talked about earlier. Leverage is the key. I love it. I love it. Bring it back full circle. Now, how do you raise capital? Like, is it different when you're raising for a syndication or when you're doing a fund? Because I know you're doing a fund right now. You're raising for a
Right.
fund. What's the difference when you're raising for a traditional multifamily deal instead of a fund?
Yeah. So there's different types of funds. There's what they called a special purpose vehicle fund, which is a fund. It's like a mini fund that raise money for one deal at a time, very similar to a syndication.
Mhm.
So in an SPV fund, that process is almost identical as syndication. There's no difference because from your investor's perspective, they know exactly which asset they're investing in. Okay.
Mhm.
A lot of times when we're talking about funds, we refer to traditional blind pool fund, which I also have that as well. I haven't started raising money for my blind pool fund just yet. We just got it launched. Um, And with that, with the blind pool fund, the investors don't yet know what deal you're going to put into the fund. And
Right.
so it requires a higher level of trust. Like they have to, know you, trust you, perhaps invested with you before already in your syndications, for them to have that level of comfort that, hey, the deals that you're gonna put into this fund are gonna be, good deals, just like in your syndications. The way that I'm planning to the way that I'm planning to raise for this traditional blind pool fund is, while I'm raising over here for my SPV fund, special purpose vehicle fund, I let my investors know, like, hey, to invest into this opportunity, you have two options. Option A, you invest into this one property only, um, or option B, invest into our fund over here, which will be acquiring properties like this, including this one. So this one will be included in this fund, as well as all of the properties that we are acquiring here in 2024. So your money, the exact same $100,000 investment over here, it would be just that 100,000 goes to this property only. But over
Right.
here, that same 100,000 will be diversified among all of the deals that we do in 2024. And so we're giving that as an option for our investors to pick and, to get to choose. They might decide it like, hey, well, can I do 50,000 in this deal and 50,000 in the fund? Yes, well, you can do that as well. And then the third type of fund that you might have heard of out there called customizable fund.
Mhm.
So a customizable fund is like a hybrid. It's when the SPV fund and the traditional fund get married, it becomes a customizable fund. It's at the core of a customizable fund, it's like a traditional pool fund at the core of it. But where it becomes customizable is that the investors can choose to invest in only one asset that the fund owns, and not having to invest in all of the assets that the fund owns. So that gets, customizable funds are not as popular or as accepted uh, as a traditional fund is. And so that's why it's not as popular yet. But I think it is, it is growing more and more in its popularity. It has any of these, whether it's SPV, customizable, or traditional blind pool fund, they all have their pros and cons to them.
Right. Right.
The biggest pros and cons, let me kind of share that. In a customizable fund, in an SPV fund, you're still having to raise money one deal at a time. So that grind work, that rat race that you go through, like you do in syndication, it's still there. you know.
Right.
Um, in a traditional blind pool fund, because you're able to raise money before you even have a deal, that allows you to have the money already there for you, and you're raising money year round, regardless if you have a deal or not. And so that's some of the pros and cons.
It's exciting. It's exciting for investors, but how are you explaining this to investors? That's a hard part. Our investors come back and they ask very interesting questions about this. How are you explaining funds to all of your investors? Is it different than how you explain the traditional syndications?
Not really. I mean, the only fund that you have to explain differently is the traditional blind pool fund.
Right.
The SPV funds, the customizable fund, because they are investing in that specific deal, the conversation is around the deal itself. The, you know, h- the how their money gets entered into the system is really irrelevant for the investors. They just know that that's the deal I'm investing in. So whether it's through a syndication, an SPV fund, a customizable fund, for them, that's just the back end work that us as fund managers do. The investors don't care about that. The traditional fund, we do have to explain, and we have to sell them on the benefit of diversifications. Just like the example that I said, if you have 100,000, if you invest in a syndication, in an SPV fund, or a customizable fund, that $100,000 goes to just one asset. But in a traditional blind pool fund, that 100,000 can go among 10 assets, 20 assets. And so you have a much greater diversification for the exact same amount that you're investing in. So yeah, so we have to, so on the fund level, we just have to keep on selling the diversification benefits.
Right. And it's all about trust. Because at the end of the day, if these investors don't trust you, they're never going to go into a blind fund because that's
Right.
that's
Yeah.
different. That's hard.
Well, I mean, yeah, like, and if they don't trust you at all, they wouldn't invest any kind of fund with you, regardless if you're blind or not.
Well,
Yeah.
so how are you adapting your capital raising strategies with what's going on in the market right now? How are you
Yeah.
changing it up with
Yeah. So
everything that happens?
right. So two things that are happening in the marketplace right now. So number one, we are in a down cycle right now. Real estate has a cycle, just like stocks does. Is the only difference is that in real estate we have a 7 to 10 year cycle. Okay. We happen to have rode this wave for like 12 years. But now we're in a down cycle. Just know that it's just cyclical. Okay. That's just any kind of investments. And right now, because we're in a down cycle, there's more negative news. There's, people talking about foreclosures and capital calls and stuff like that. So so investors are a little bit more, well, not a little bit. They are more careful. And some investors too have money stuck in deals, and some of them even lost money on deals. So we do have to overcome a higher level of skepticism. And so what we're having to do to overcome that is really like talk to a lot more investors. So we
Mhm.
have to do a lot more work. And yeah, so we have to do a lot more marketing, talk to a lot more investors. So that's number one. Number two, um, we're we like it's even more critical that the deals that we're raising money for have a good story to it. If it's like right now, raising money for Class B, Class A's, they're much easier to raise money for than Class C because most of
Right.
the deals that got in trouble were Class C properties. So if you are raising for a Class C, just know that that's a hurdle in itself that you have to overcome. So what's unique about your Class C? And it really doesn't, this is applicable to all the classes, but what's unique about this asset that have you be excited about it, that you think your investors should come in? At this time, like, getting property is at a really good discount is a really big part of it, right? Um, so if you're getting properties at, 30, 40, 50%, discount from when the height was, like that's a good story because now they can
Right.
see how the money is well protected. And then the second thing is we're starting to get a lot of requests from our investors for assets outside of multifamily. So we're looking at self-storage, we're looking at car washes, we look at different opportunities like that. But yeah, so that's and as much as I love Texas, and
Uh-oh.
my investor in Texas also love Texas, but my investors outside of Texas, they're like, I want to diversify outside of Texas, as well, because there's just, yeah, like just Texas is a big state to begin with. We do have a lot of assets, but there's also a lot of bad news coming from Texas properties, especially
Mhm.
Houston. And that's another, that's the other parts, and so like, so when I'm raising for money in deal in Houston, I have to let them know. It's like, well, if you look at the operators that get trouble in Houston, it's because they're not local here to Houston.
Mhm.
So they
Mhm.
don't understand the submarkets, and the different neighborhoods and stuff. And so the reason why I can have confidence in this Houston asset is because I live in Houston. I can drive to it. I know exactly, where it is. And so yeah, so like if so I guess I say all that to say you got to make sure the property has a good story. Make sure that like you yourself have a good story of why this asset, is why you chose this asset, and like what's your level of expertise that you can bring to it to help build your investors' confidence in it as well. things like that. But yeah, but I mean, we are definitely fighting an uphill battle with raising money right now, especially for multifamily, with all the news out there. So yes,
Yeah.
we have
I
to
mean,
10x.
oh, we have to. We have to
Yeah.
10x it because honestly, all these deals that we're all seeing the same deals. They're all the same. And it's really the team that makes the difference. It's the team that you're working with. It's that general partner team and the story that you create and the passion that you have about those deals. Because if you don't have that passion, if you don't have that connection to it, or someone who lives, like you said, in the location of those deals, the investors are going to see right through that.
Yep. Exactly. So yes, 10x your effort. This is the time. This is, it's a lot of hard work, but like this will build you a really solid foundation for when the market turns, right? So we just have to hang in there for the next, couple of years. But imagine this. Imagine if you were an investor in multifamily back in 2009, 2008, 2009, when that market crashed, and you
Right.
rode that wave for that, that 10 years, 12 years, like all yeah all of the multifamily investors that I know that invested back then became multimillionaires because the market just like went through the roof after that. So yeah,
So
so
you're
that's what I'm
saying if you had a crystal ball, you're saying that that's going to happen sometime soon?
yes. And the cool thing about the crystal ball
Yeah.
is it happens in every market cycle. There has not been one single market cycle that it didn't go up. Like every single market cycle, it went down and up and down and up. Like that's just how it works. And so, it's about like your ability to stay in the game and ride it up when it goes up. Yes.
So basically, you just said that you have a crystal ball. I think that's what you said.
Sort of. I don't know exactly when the bottom is. I don't know exactly when the top is, but I know it's inevitable that it's gonna go up. Like that's just that's as as certain as I don't know, any physical thing you can touch and feel, right? Like
That's
you go
true. That's
yeah.
true. I mean, even Mike put in the chat, he's like, and for 100 years, it's always going up. It's
Yeah.
always going up.
And I'm sure it's been like that for way more than thousands of years or millions of years.
Oh, it's so true. All right. Well, I have some questions here, but also, if there's anyone in the chat who'd love to ask Tim a question, please feel free to drop it in the chat. I do not want to miss any of your questions here. We do have Tim, and we want to make sure we get some great of your questions answered. But how important is it for you to keep communicating with your investors, and how do you do that? Because like you said, when we have investors, we're with them for at least 5 years, not just we're done with the raise, we're done with them. So how do you keep communicating with them instead of going off to the next deal and raising for that?
Yeah, so we do have a monthly newsletter that we send out to our investors. We update them on the deals that are happening, and and that monthly newsletters goes out to both our investors that are in the deal as well as like just people on our email list. Now people in the deal, we give them updates that's more specific to their asset, but yeah, so the newsletter is a big one, and then we're constantly hosting webinars where it's very similar to what you guys do at
Yep.
Massive Capital, constantly hosting educational based webinars, so that way we're staying top of mind in front of our investors, and been booking calls if there's anybody. I literally just sent out an email last night. Anyone who haven't had a one-on-one call with us yet, we want at a minimum get them on a quick 15-minute call. So yeah, so everyone who opts into your to your website, to your CRM, is a very important person, and to be connected with them.
Mhm.
I'm building out and to help with all of this, as human beings, like we're all really bad at following up long term.
Right.
Some even not good at following up short term. But I'm building out an AI chatbot right now that, the minute someone opts in, it's going to, text them, getting them to book a call. If they don't book a call, it's going to follow up with them in a week, in a month, in 3 months. So the goal always is that every lead that comes in needs to have a call book. So the AI chatbot checks, like, automatically checking in. If they don't have the tag that their call has been booked, it's gonna continue to follow up with them until that happens. And so yeah, so we're implementing things like that to make sure that we are in communication with our investors.
It's good. It's good. I mean, communication is important, and also being able to have a tool to use to keep all of your investors in one spot. Whenever they come across your website or any
Yep.
website, they know that they learn one thing from you, they're in the system forever.
Yep, exactly.
All right, we do have a question in the chat. Is it better to raise capital for a deal fund first and then gain experience raising capital for several deals? So before doing fund to funds. So where should they start with
Yeah,
raising for a fund or fund to funds? Where is the first starting
yeah,
off
yeah.
point?
Yeah, the term fund of funds just kind of uh, might make it more complicated than what it should be. But uh, fund of funds, fund of fund, fund of syndication, fund of deal, like it's all the same thing. Meaning that you can, even though the legal term is fund of funds, you are raising money for one specific deal. And so it's just that the legal documents that you're using. So before fund of funds was popular, the co-GP model was what a lot of us are used to.
Mhm.
And as a co-GP, you are coming into the deal as a general partner in the deal. You have to have, actual roles that you play in the deal, like asset management, like, due diligence and what have you. And so that's the normal co-GP model. The fund of funds model, even though the how you raise money is almost identical. It's just now you are an active partner in your fund because now you're a fund manager. Um, while you do have an active role in your fund, you don't need to have any active role in the deal itself. Because
Mhm.
when your fund invests in the deal, your fund invests in the deal as a limited partner. And so it's still legal for you because you are a fund manager. You do have an active role in your fund, but it makes it where like you don't have to do anything at the asset level anymore.
No, it's good. It's good. All right. I've told people who are raising capital that they have to have an investor avatar, an investor that they're looking for,
Mhm.
and a certain type of person that they're gearing their communication to. So, is your Facebook community and LinkedIn groups, are those associated with your chosen avatar? And also, is a great way to attract prospective investors?
Yeah. So there's two different things that I do. And I'm an advanced enough marketer that I can expand into other avatar more easily than most people. But so there's my, I in a way, if my biggest avatar are business owners.
Mhm.
That's my most core avatar. And it's an avatar. I've been a business owner now for 22 years. Even before I was officially a business owner, I mean, I was still, doing entrepreneur type stuff in college and even in high school. So I've been as an entrepreneur, as a business owner for a long time. So that's the avatar that I resonate with the most. I can speak to the most. Um, and so yeah, so that's my sort of default avatar. And I am now expanding beyond that to also reach out to doctors, dentists. I have a few dentists that I work with, love working with them. So I want to build that avatar more. Yeah, and I've interviewed a lot of the top syndicated fund managers in our industry, and they all start out the same way where they start out focusing on one avatar, and build that as their base. And as their investor database grow, they find themselves attracting other avatars, And so the avatar get expanded. Neil Bawa is a good example of this. So when he first started out, since he was a tech guy, a data scientist from the Bay Area, that was most of his investors were, other tech people. And now he's very heavily targeting doctors right now. So yeah, I mean, you start where you know the most amount of people. Like if you go look in your phone, your phone contacts here, like what's a profession that you have the most contacts for? Start with that avatar. And then you can always, choose to expand from there.
It's a good way to get started is picking one. I like that. And then expanding through that. Because if you're trying to go for everyone, you're really talking to no one. So
Yeah.
it's really important to figure out what your client avatar is first. So I'm glad you mentioned that. So people getting started today, let's say today you are starting raising capital for the first time and you've never done it before.
Mhm.
Where are you going to start? Or what's your
Yeah,
advice for people in that position?
yeah. Definitely like get plugged into someone who is raising capital, whether it's with Massive Capital, whether it's with me and my team. Find out like who's doing this business model that they're out there raising capital. And plug into them and go on and work alongside with them. That's the easiest way to get started. Because when you're working alongside with someone, you're leveraging their experience, their knowledge in the space. Like I was just talking to a friend. It's funny that you asked a question because he's like, well, how do I know like who's the best operator to raise for and what the best asset types to raise for? I go, you don't need to know. Why don't you just go on raise for the deals I'm raising for? Like I've already did all of that hard
I already
work.
did all the hard work for you. All you got to do is join up. Let's
Yeah,
go.
I think that as a new person, I think sometimes when things are so easy, we dismiss it.
Mm-hmm.
Right, we're like well, it can't be that easy,
Sure.
so I need to take this other route that's harder because that's it's like somehow as a human being we relate harder as more legitimate or like more real than when things are easy.
So true.
uh but
Oh,
uh
that's
but
so true.
yeah, like um going back to this leverage again, I think that like that's the ultimate answer to everything that we need is who can I leverage? How can I leverage, yeah, like leverage in everything, leverage in, experience, in knowledge, in vetting, and like like if you think at that level, holy cow, yeah, you can grow in this business so much faster. It's just that we all start out thinking that we need to do it ourselves. Oh, I gotta find my own deals. I have to build relationship with my own brokers. I have to raise my own money. And I have to like no more, no more thinking that you have to do it. It's like in like that book Who Not How really comes to
Mm-hmm.
mind. This business that we're in, it takes that book to like 1,000 level of Who Not How. It's like you don't have to know a single thing in this business. Just get plugged in to the people that are doing it and work alongside with them. These deals that we do in multifamily, they're bigger deals. There's more money to go around. And so it's all about collaboration and working with each other. I've been in single family for, for 22 years. In that business, the deals are much smaller. So yes,
Right.
you can do it all yourself. Like, it's not a big deal. But in this multifamily commercial real estate where you're dealing with tens of millions, hundreds of millions, it's all about teamwork. And so really play to that as becomes your superpower. Play as a team, not as an individual.
Oh, it's perfect. It's perfect that you mentioned superpower because every time I see you at an event, I'm always hearing you ask everyone what their superpower is. So, what's your superpower?
You know, um, Connections is a really strong superpower. I have a couple, but marketing is a really good one. Connections, I'm very well connected because, I just love getting to know people. And yeah, and then, my marketing because, I make myself much bigger than I actually am. Funny story. So funny story. When I first started in single family homes, um, 22 years ago, and I'm in a like a little meetup room. The way that I would introduce myself, you guys ever met me in person? I'm 5'4". I'm pretty short little guy. I would stand up on the chair and said, "Hi, my name is Tim. I'm the tallest guy in the room." So, so now what I do that is I do that on Zoom because I bring a whole community together. Like just people see me as a much bigger leader than I might even see myself to be. I'm still the same 5 foot, 4, guy, but my image is a lot bigger because I'm a I build communities. I'm out here educating the community. And so you want, so that, like, that's my superpower. It's really like uh um you know marketing myself that way. And so because of that, I attract amazing people into my world. And yeah.
Well, you've got a lot of short friends who are now posting this in the chat. So I do have to say, the first time I met you, it was at your Hero conference, and you had interviewed Schreier from Massive Capital, and the two of you standing next to
I
each
know.
other, like you really have to zoom out. 'Cause, I mean, he's like way above 6'6", I don't know, 6'7" or something. Not that tall, but it seems like it.
Right.
But the confidence is so true. Like, as long as you feel confident what you're doing and you feel confident and passionate about what you're doing, it doesn't matter what size you are. So I love that
Yep.
you mentioned that. It's a good
Yep.
superpower to have. And I totally love that. That's awesome. Good. Yes, Trevor said you act 7 foot tall. I love that. I love that.
Thank you, Trevor.
But that's what you got to do when you're raising capital. Raising capital is
Yeah.
not something that you can do
And
behind the screen and not talking to people. You have to be able
ri-
to connect.
right. And one thing I want to say to that, because we're all gonna have our insecurities, whether it's height, whether it's, size, weight, whatever, intelligence, we're all gonna have our insecurities. And what we do, in terms of like raising money, we gotta step out of ourselves and make it about the investors that we're talking to. Like, how are we contributing to them? How are we bringing of service to them? What is it that they need? How are we vetting these deals so that way we make it safer for them? So when you're focusing on like what you can do for the other people and not think about yourself, all of those insecurities just becomes irrelevant. I mean, you can be 1 foot tall and still be of service for people, right?
So true.
You don't have to be 7 foot tall, like Shariah is, and you don't have to be. You even have to be a bowl of love like Trevor is.
Full of love. Oh my
Bowl
gosh.
of love, yes. You don't even have to be that. All you have to do is be of service and really be very clear on what's the difference that you want to make for the investors that you're serving. Right? Like for me, I know I've invested in a lot of deals as a passive investor, and I invest in businesses as well. And like I know how important it is to find the right investments that you don't lose money over and you don't lose sleep over. Like those two things are very important. So, I mean, at my position now, I get people hit me up with opportunities to invest on a daily basis, if not on an hourly basis sometimes. And so, like, all of my years of experience and my all of the connections I have, they all come together so that way I can best find the right opportunities to let my investors know about. And so when they're investing through me, they know, like, it's not just about the deal. It comes with 22 years of experience, comes with millions of dollars invested in my own uh, education, my own connections, to give them this one opportunity. And so yeah, so it's like you got to remember that, like, that's what you bring to the table. If you make that be your priority, keeping your investors, safe, being a good steward of their money, you can have all the insecurities that you want, and it wouldn't matter.
It's true. I mean, we are selling some stuff that's pretty cool. I mean, financial freedom, through passive income is awesome. And we need to focus on that. We need to focus on the exciting things that we get to bring to people. I mean, we're teaching and explaining financial literacy, which isn't talked about in
Yep.
schools. It's not talked about every day. So we need to capitalize off of that, really be talking about it. Because like you said, this is so cool. It's exciting to help someone through this process.
Yep. It sure is.
Well, Tim, I know people can find you. What are you going to be next week? I'd love to talk about that real quick.
Yeah, so I'm hosting an in-person event next exactly 1 week from now, May 3rd and 4th in Dallas. The event is called Fun of Funds Live. You get to learn all about funds, Fun of Funds, capital raising there at the event. We'll have, a room full over 100 fund managers there. Don't let the word funds and fund manager get over your head, because a lot of these fund manager, they really just started recently.
Right. Exactly.
And so it's not a complicated topic at all. It's a very powerful tool for us to use, especially when it comes to raising money. So yeah, funoffundslive.com. Join us. We'll be there, especially if you're in Texas, where you can just drive there. Definitely come May 3rd and 4th.
Awesome. Awesome. Thank you for that. Do not want to miss that opportunity. And today we talked about leverage. We talked about using tools to your advantage. If you are a new capital raiser and you need a portal or a CRM to house all of your investors and make sure that you're keeping up with that communication, we have one. It's called Client Harbor. There's a 14-day trial. You scan that QR code. If you're listening online, it's clientharbor.com. If you need help, just get with us at Massive Capital. We would love to help you. But there is a 14-day free trial that will really explain why it is important to have a CRM. If you don't have a CRM, make sure you get one. We also have a coaching program here at Massive Capital. It is called our Pathway to GP. And we would love to work with you to help you grow faster. As Tim said, he started this couple years ago. I don't want to say how many, but he started a while ago. We want to accelerate you. We want to help you grow. So we want to make sure that you are growing as fast as humanly possible. We have May 10th. It's our virtual conference. We are excited to spend the day with you virtually, learning from speakers like Tim, and we want to make sure that you are there. You do not want to miss it. It's massivemultifamily.events/vcon-May. So if you are listening, please sign up. We'd love to see you there. And Tim, thank you so much for coming today, talking about your experience in raising capital and giving us an opportunity to learn from you. I will let you give the final thoughts.
Well, thank you so much for having me on. It's been a pleasure. I've been working with Massive Capital for so long, ever since I started here, pretty much, and it's been a great partnership. Love, our collaborations that we've done, and looking forward to a lot more. And so if you guys, can attend our event in May, do attend. If not, scan my QR code, get connected with me, through our weekly parties and things like that. But thank you so much for having me on today.
Thank you, Tim. And thank you, everyone, for showing up and listening. This has been Massive Masters Raising Private Capital with your host, Maria Marks. Have a great rest of your day, and we'll see you on the next one. Thanks, everyone.
See ya.